It's a Top That Trade Day. Joining us now, Phil Flynn, a Fox Business News Network contributor, and Alan Neckman, the chief market strategist of BullseyeOption.com. Going toe-to-toe in our trader game. Round number one, FOMA fade. FOMA stands for fear of missing anything. There's a concern among investors about TINA. TINA stands for there are no alternatives to stocks. Tell us how you avoid FOMA with alternative investments, perhaps T-bills.
Well, TINA, there is no alternative, was the way it was for the last couple of years when money was free, that the stock market, benefited from that. Now, this TARA, or as I like to say, TAPA, because I'm a food guy, TAPA, there are possible alternatives now. You've got to think, are you missing out with 5%? Depending on where you are in your life cycle and your investment cycle, is 5% great? Yeah, it is great. But do you want more in the bigger picture? And if you've got 30 years left to retirement, I still think there's a lot of upside in stocks. Let's remember, we're more above the bottom right now from last October than we are off the all-time top. So even though it may not feel good, we're less than 15% away from the all-time highs in the S&P.
And I'm all about earning interest. I think that's great. But, to be honest with you, the reason why they're paying you interest is because they're making more money, because when you put money in a long-term interest thing, you're going to be losing money to inflation, right? That's why they're giving you money. It's not free money. Nothing's free. Listen, make no mistake about it. Part of your portfolio should be earning some interest with these higher rates. But I think one of the things it's telling you is that there is an inflation play here. Where does that usually mean that you should put some money? That's in the commodity sector.
Round number two, enough talk, time to trade. It seems like you guys are hot on the energy sector. You talk about energy and oil all the time on our show. Are you exhausted on that topic? Or are you finding energy and oil stocks that have the potential to pop?
Finally, we're getting some movement. Talk about it, Phil.
Yeah, really. I mean, if you look at what we've been talking about as a structural shortage in the energy markets for some time, and it's showing its ugly head right now. When OPEC decided to cut production, snub their nose at the world, what they're saying is, we know we can control the price. And what did Saudi Arabia do? They're not worried about a recession. They're worried about raising prices. They raised prices of their selling price to Asia. And why was that? Well, you look here in the United States, we've been discouraging more oil production, so we're not growing as fast as we normally would. And at the same time, we've drained our strategic petroleum reserve. So we don't have as much as a backup. So when you have less in reserve, the Saudis have greater control over price, and they're taking advantage of that right now.
They're a cartel, Phil. They're a cartel. They're going to do whatever they can. Now, as far as the strategic reserve, I don't want to get into it, but someone made $4 billion selling high and filling up back low. Now,
the problem is they haven't bought it back yet, though. That's a problem.
E is the ETF that tracks energy stocks, and the PE is 8. So we've been talking about it over and over and over, and that's why I trade long-term options. And I know you've been talking about long-term options as well, to be there to position for success, because it looks like if crude can break above this 90 level, we could get a quick move up to 110.
Round number three, sentiment stink. Why is investor sentiment so bad, and what does that mean for today's opportunities? Is it just me, or does that signal a good time to be in the market when others are feeling badly about the stock market?
That's interesting. But as a trader, and Phil's going to, typically look at it the same way, I think, is as a trader, when everybody gets overloaded in one opinion, the market usually does the opposite. And this is, if you look at historically, when the S&P has this kind of negative sentiment, that's usually a positive sign historically. Now, it can always do whatever it wants, but I think psychology is a game that's 90% of your trading concern. And people right now are very negative, but that can shift very quickly.
I think if you look at the mood, I mean, you base indices when the market is either too optimistic or too pessimistic, and you usually go the other way. And so Ellen is absolutely right on that one. But I think what you have to look at is, why has the sentiment got so bad so quickly? And a lot of it has to do with the banking scare. The Silicon Valley Bank situation caused a sharp drop in economic activity. And the question is that going to be sustainable, or was it a fear reaction.
Here we go with your bonus round question for today. Ben Affleck and Matt Damon are known for making movies. True or false? They are so close, they once shared a bank account.
True.
True.
The answer is true. That makes two winner chicken dinners. Thanks so much, guys. Go to businessfirstam.com for where to see our show.